please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Mihir, I want to come to some of the interesting trends that we've seen in the market of late. And one of them is, this whole move towards corporate lenders. Suddenly, these are the stocks that have had a good run. Now, this week, of course, that rally itself was stuttering a little bit. But how are you sort of breaking down your investments when it comes to banks? Are you still keeping a preference for the private sector names, or are you willing to deploy some money on PSUs and some of the corporate lenders?
Hi. So on the corporate lender side, obviously, we have taken a call that at some point in time they had become so much cheaper compared to the retail-oriented banks that there was value definitely emerging. But within the corporate lending space, we are still preferring the private sector banks because of a couple of reasons. One is that the recognition of NPAs has been much faster. I think the overall provisioning for NPAs is better. And the other part is that the PSU banks, even if they have provided, etc., they don't have the capital for growth. So if you look at the overall picture, we have shifted from retail-oriented private banks to the more corporate banks. And in a couple of the banks, you also have the potential excitement of a change in leadership and probably some new faces, more exciting faces coming up, which again might lead to some kind of a bit of a buzz there.
Okay. So the other two areas where the move is on, and actually more than IT, it is pharma, where once again this week we saw very large gains. Is there more to go here, Mihir? And what is really driving this latest leg up in these stocks? Is it realization that the currency is going to be in this new range, could be between 70 and 72, or is this operational improvement and some of the regulatory headwinds going away?
So it's a mix of everything. Currency, of course, has been the last leg that we've seen in the last 10 days. But given the fact that these regulatory issues have been around for at least 3 to 4 years, it was time that the companies which had started the corrective measures in the last 3-4 years would have started to see the benefits, and the FDA approvals, etc., are coming in slowly but surely. That's one thing. And the second thing is that, relatively speaking, this segment had become a bombed out segment over the last 3 years. So I think deep value combined with improvement in fundamentals as well as the currency. And the other thing is that in the current macro, there is no other place to hide, because the consumption names, FMCG, discretionary, etc., had been bid up to very high levels. Even the private sector NBFCs and financials were bid up to very high levels. So frankly, if you want to hide in this market in terms of value, probably this and IT were the two segments to go to.
Okay. On consumer, Mihir, this sudden correction that kind of set in, I mean, we always knew that valuations are high, nothing new. We always knew that there is competition that's building up. Oil prices are elevated, so maybe the input cost headwinds could be a thing in the future as well. What do you think triggered the kind of correction that we saw this week? And would you use this correction to buy into FMCG stocks?
So as you rightly said, valuations were never comfortable to begin with. And the fact that we did see the currency depreciate means the rise in input cost. So sometimes when valuations are too stretched, it's just one or two triggers that the market is waiting for. And if you're not going to increase allocation to equities, then you're going to churn your portfolio, which means that you'll have to sell something to buy something. So if I want to buy, say, the pharma or the IT segments, which I am underweight on, probably as an investor, I'll sell something which I own and I find expensive, and that's where you see the selling coming from.
Mihir, what are you doing in the market right now in terms of where are you churning, if you're churning at all? What are you selling? What are you buying? Broadly, thematic.
So thematically, as we have discussed, we did find value in the IT segment. So the last few months, our exposure to IT has gone from underweight to overweight. Pharma has gone from underweight to neutral, and we have reduced exposure to the retail-oriented financials, both NBFC as well as banks. and moved to the corporate banks. So I guess now these look like obvious trades, but I think we are in a bit early in this.
Okay. Mihir, what is the sense on the auto space? Because again, interesting trends seen this week. A laggard like Tata Motors was finding buyers, and towards the end of the week, we had a lot of the two-wheeler stocks that were flying away. Now, on two-wheelers specifically, how do you look at some of these names? And ahead of the election season, is this a bit of a positioning that perhaps is now building in?
Yes, so two-wheelers has been again a relative laggard space, not only versus the market but within the auto space also. And there is some hope that the price competition that was threatening to loom in the segment might be coming towards some kind of a solution. There was some indication that one of the players hiked prices of some of the models of two-wheelers, so that probably created some kind of value buying in the two-wheelers segment.
Okay, Mihir, if you look out 6 months from now, where do you think the market will be higher or market will be lower? What's your sense at an aggregate level?
So from this point onward, we expect, say, high single digits return from the markets in the next 12 months. We do have the next quarter, which should also show good earnings growth because of the low base of last year. But the key variable is what happens in the December and March quarter earnings, because there we have normalized base to start with. And if we maintain this momentum on that higher base or normalized base, then I think the markets should do well. Of course, the biggest thing that we are worried about is oil prices and the currency, which hopefully should stabilize in the next few weeks. We do expect the government and the RBI to start intervening beyond a point, and I think we are reaching closer to that point as we speak.
Just to go back to the last sort of election, general election, approximately this is the time, August, September is the time when stocks started to run, right? I mean, and by the same time, essentially August, September 2013, and by August, September 2014 or beginning of 15, stocks were, 5x, 6x, and some of them big outperformers. Of course, the starting point was extremely depressed kind of levels. But do you think we will see any sort of rally going into the elections, or this is going to be a completely different one?
So typically you do see a rally in the run-up to the elections, but elections are still about 9-10 months away. And you also remember that in September 13 also we had a taper tantrum and we had the currency issues. So probably even if there's a correction, as we near the elections, we should start seeing a build-up before the elections again. Now, whether it starts after a bit of a correction from this point in time, we don't know.
Okay, we will find out as the weeks and months go on, because that will be the market's biggest preoccupation as we get to the end of the year. Thank you, Mihir, very much for joining us on the show today.